Good afternoon. At this time, I'd like to welcome everyone to Angel's Q3 2025 earnings call. At this time, all participants are in listen-only mode. A question-and-answer session will follow the formal presentation. You may be placed into question queue at any time by pressing *1 on your telephone keypad. If anyone should require operator assistance, please press *0. As a reminder, this conference is being recorded. It's now my pleasure to introduce your host, Jeanette Masters, Investor Relations. You may begin your conference.
Hello, everyone, and welcome to Angel's third quarter 2025 earnings call. Joining me are Angel's co-founder and CEO, Neil Harmon, and Angel's Chief Financial Officer, Scott Klotzner. Our third quarter earnings press release is available on our investor relations website at ANGX.com, where we also encourage you to sign up for our email alerts. Neil and Scott will make about 30 minutes of opening remarks before we turn over the call to questions from our sell-side analysts, as well as questions pre-submitted by our guild members. Thank you all for joining us. Let me pass the call over to Neil.
Thank you, Jeanette, and good morning, everyone. It's an honor to speak with you today on our first earnings call as a publicly traded company. Scott and I are delighted that we're getting started with a great set of third quarter results, where our most important measure of success, our guild membership, is 1.6 million, up more than 500% year over year and up 19% sequentially. Also, today we're announcing acquisitions of the highest performing franchises on the Angel platform and a successful AI-driven discovery technology in the Angel app, which has positively impacted watch times by 12%. These watch times are the most significant driver of Angel Guild retention. But more on all of this shortly. This moment marks the culmination of a journey years in the making. The successful completion of our listing, resulting in Angel's debut on the New York Stock Exchange. It reflects the strength of this community, our mission to tell values-driven stories, and the power of our unique audience-first model. As Jeanette mentioned, I'm joined today by Scott Klotzner, who brings a wealth of experience in his 35-year career as an executive across capital markets, M&A, and financial leadership at multiple public companies. And he's been instrumental in preparing Angel for life as a public company. I'm grateful for his partnership and steady hand. On behalf of our leadership team, I also wanted to express sincere gratitude to everyone who helped us get here. Our guild members, our early supporters, our investors, and our entire team. Your hard work, faith, and dedication have made today and every milestone possible. And this is just the beginning. About 2 months ago, the Angel team was welcomed by the New York Stock Exchange, marking the milestone of our public debut. It feels like the starting line. Don't underestimate the importance of this milestone in our journey. It elevates the Angel brand, increasing our reach. It allows us to grow the Angel Guild more rapidly, our recurring revenue business. It supports engagement of the Angel Guild, which is our differentiating edge in the over $100 billion per year global TV and streaming market that is growing in excess of 20% annually. Angel was founded on a fundamental belief that telling values-driven stories will inspire families and communities around the world. Our company is a response to an increasingly out-of-touch Hollywood studio model. At Angel, 1.6 million members of the Angel Guild, not remote Hollywood gatekeepers, decide what films and television series get produced and distributed in theaters and on the Angel platform, which inspires mainstream audiences. Our guild members put their money where their eyes, heart, and values are. The Angel Guild details the kind of programming they crave and acts as virtual co-producers on every project. This fast-growing community is at the heart of everything we do. As of the end of third quarter, our guild is 1.6 million paying members and continues to grow at an exciting pace. But for those new to the Angel story, it's worth highlighting just how significant this growth has been. Because paid marketing for the guild launched in the second quarter of 2023. And by the end of 2024, membership had reached just shy of 550,000 and accounted for just over one-third of total revenue. Today, just 11 months later, members now contribute to 77% of our revenue, underscoring the power and the scalability of this community-driven model. The Angel Guild does three things that define our business model. Votes to select films and TV series. Second, rallies in theaters to support theatrical releases and spark cultural movements. And third, funds in part future films and TV shows through their monthly memberships. Together, they are helping us reorient the Hollywood studio model to one that is audience-centric and mainstream. In our model, we don't guess what audience want to pay to see. They tell Angel and filmmakers what they want to see and back it up with their dollars. Evan Shapiro from the Media Odyssey podcast believes that this is the future of Hollywood, and also that Angel is pioneering it. In less than 2 years, we've found 1.6 million people who agree with us, and we believe that this represents only a fraction of the total audience that can become part of our Angel Guild. I'll tell you what, we cannot wait to welcome all of you. Our approach is confirmed by independent data. The average Rotten Tomatoes audience score for Angel theatrical releases is 93%, significantly above those of any major distributor or streaming platform globally. Allowing audiences to decide which films and television series can come onto our platform is going to be massively disruptive. Every Guild member also makes a pledge, what we call the Pledge to Amplify Light, which says, when I vote, I pledge to help choose excellent entertainment that is true, honest, noble, just, authentic, lovely, or admirable. That pledge is more than words. It's our reason for being. It's how a fast-growing global community aligns around a shared mission. It's what unites us. It's why we started this company. For shareholders, the Guild isn't just a curation machine. It's a recurring revenue engine. Membership fees provide consistent, recurring income that helps fund new projects, support filmmakers, and build long-term shareholder value. There is power behind a story that resonates. I've met countless billionaires who, after decades of building businesses, decide it's now time to make a movie. But they understand that film is more than entertainment. It's culture. It's legacy. And this desire to leave a mark isn't unique to billionaires. It's universal. The Angel Guild makes that possible for regular people. We partner with those who share the same passion to create stories that inspire and endure. And Guild members get to interact with filmmakers, and they get to see films be produced and come to the silver screen. And one of the most rewarding things for me to see is how fast the Angel brand has grown. I can wear an Angel t-shirt in an airport anywhere in the world, and someone will stop and thank us for what we are doing. That recognition isn't the result of traditional marketing spend. It's the result of a movement that aligns around values-driven, family-friendly storytelling that's making our world a little bit better place. This quarter was a foundational one. While it followed a naturally lower theatrical release period as the back-to-school season concluded, there was a strong demonstration of the stability and scalability of our recurring Guild revenue and the resilience of our community model. Revenue reflected the smaller slate of new releases, but the underlying metrics that matter most, engagement, retention, and Guild membership, continue to grow. That's the key story for investors. Our business isn't solely defined by the timing of film releases or the seasonality of entertainment, but by the enduring relationships we facilitated by building this technology to connect audiences and filmmakers. Every new Guild member contributes to a growing base of high-margin recurring revenue that compounds over time. And as the Guild grows, their joint decisions become smarter at picking the winners for mainstream audiences. We call it audience intelligence. While Sound of Freedom showcased the potential of the model for scale, the Guild itself has now grown to more than twice the size of the revenue of our previously biggest hits. The Guild is an engaged, vibrant community that continues to expand and strengthen our long-term foundation. And looking ahead, we have a strong theatrical lineup that we expect will meaningfully contribute to both top-line growth and guild expansion in the fourth quarter. Last month, we announced our first significant strategic development that reflects our commitment to long-term intellectual property ownership and brand-defining storytelling. This was the acquisition of the David franchise in partnership with 2521 Entertainment. David is an epic animated film and TV series based on the timeless story of David's journey from humble shepherd to king. It tests the limits of faith, courage, and love, culminating in a battle for the soul of a kingdom. It's Angel's most highly anticipated theatrical release, and it's the largest crowd-funded film in history. It's the kind of film that makes our work at Angel totally worth doing. This animated epic features original music by acclaimed musicians Phil Wickham, Miri Masika, and Lauren Daigle, and is set to premiere in theaters on December 19th, 2025, just in time for Christmas for all our families. I'm thrilled to share that David has already earned nearly $3 million in theatrical pre-sales in just 3 weeks, the highest in Angel's history, outpacing even King of Kings and Sound of Freedom. Also, this is actually the highest ever reported for an animated theatrical musical in such a time frame this far out from the movie's release. And perhaps our greatest achievement, at least in our home, is getting my children to sing something other than K-pop Demon Hunters. They've got David now, the David soundtrack, playing on repeat. And it's been part of our strategic release to release all the songs for David, which are available for streaming right now. As previously mentioned, this morning we announced the definitive agreements to acquire our 3 highest performing series on the Angel platform: Tuttle Twins, Homestead, and the Winged Feather Saga. Homestead is a premium post-apocalyptic thriller film and television series. The film, starring Neil McDonough, and season 1 of the series draw audiences into a fractured America struggling to survive after a nuclear blast, delivering suspense with a deeply human story of faith, family, and resilience. We are releasing additional episodes of season 1 shortly, and will soon begin production on season 2. Homestead differentiates itself with strong production value, high rewatchability, and measurable pull to the Angel Guild for both acquisition and retention. It stands as the strongest member acquisition title in the Angel library. In fact, Homestead is growing faster than season 1 of our previously highest performing series based on the New Testament. Earlier this month, season 4 of the hit animated television series Tuttle Twins premiered, and my little boys made me very aware of it. The series takes families on an adventure that teaches liberty and virtue through laughter and imagination. Tuttle Twins is the most watched TV series on Angel. And we're very excited. Season 3 of the Winged Feather Saga, based on Andrew Peterson's best-selling fantasy series, is also now streaming exclusively on Angel. And my boys have asked me to watch it tonight with them. It remains one of the most successful crowd-funded family animated series ever produced. The important takeaway from the acquisitions I just touched on comes back to the Guild. Strategically, these 3 acquisitions give Angel intellectual property and highly successful franchises, compounding the long-term value of our library and increasing the retention numbers of the Guild. Whichever the genre, whether fiction or nonfiction, film or television series, Angel delivers the values-driven entertainment that our Guild tells us they're looking for in theaters and on the Angel platform. And in addition to David and these 3 other series, we have a diverse lineup of coming releases. I Was a Stranger is a powerful story of resilience and hope set against the backdrop of the Syrian civil war. It has been featured in more than 50 film festivals worldwide and received the Amnesty International Film Award. It's a beautiful film and is set to debut in theaters on January 9th, 2026. Then, on February 6th, we plan to release Solo Mio, our first romantic comedy starring the incredibly talented Kevin James. We're also preparing to launch Season 18 of Dry Bar Comedy, our flagship Funny for Everyone franchise, with more than 6 billion views. Praised by Jay Leno and featuring specials such as Adam Carolla Comes Cleaner, Dry Bar Comedy has a library of 400 hours of family-friendly entertainment, much of which is available exclusively on Angel. Wayfinder's highly successful pilot episode sparked tremendous excitement within the Angel Guild, and we're eagerly anticipating its Season 1 debut on the Angel app on December 16th, 2025. The series exemplifies exceptional storytelling that found its home at Angel after creative differences with a major streamer. Proof that great stories thrive where filmmakers are free to stay true to their original vision. This momentum segues perfectly into how the Guild serves as the key driver of our recurring revenue stream, while taking a moment to expand on additional revenue lines. We currently have 4 primary revenue streams, each one reinforcing the other: Angel Guild memberships, theatrical releases, licensing, and other revenue. Angel Guild memberships are monthly and annual membership fees that provide a growing base of recurring revenue. Both basic and premium tiers include voting rights and early access to releases, with premium offering complimentary theatrical tickets and merchandise discounts. We have recently introduced Basic Plus without ads. Second, theatrical releases bring revenue from releasing our original films through direct relationships with exhibitor partners. Every ticket sold generates a share of box office receipts, with international distribution typically routed through local partners. Theatrical's purpose at Angel is to give the Guild a moment to celebrate and to attract new filmmaker partners, as theatrical releases help retention. Third, licensing our films and TV shows to major platforms like Amazon, Apple, and Netflix. Longer term, we intend to extend those rights into our rights into derivative experiences such as video games, live productions, and themed attractions. And fourth, other revenue is a small catch-all for merchandise and physical media sales in our direct-to-consumer online store, as well as wholesale partnerships with retailers. This diversified model reflects how the Angel Guild powers not only our creative pipeline, but also our economic engine. As our membership base grows, each of these categories benefits from higher engagement, cross-promotion, and cross-pollination, ultimately creating a reinforcing cycle of growth, loyalty, and recurring revenue. So, while the timing of theatrical releases and other factors may create quarter-to-quarter variability, as I noted earlier, our long-term focus and strength is clear. Base hits and blockbusters both help Angel expand and strengthen the Angel Guild. Every investment we make in our technology is designed to deepen the relationship between artist and community. We're innovating ways for members to interact directly with filmmakers, vote on projects, and participate in the success of stories they crave. That connection will allow Angel to scale both sustainably and profitably in the years ahead. During third quarter, Angel expanded our library across key platforms, including Samsung, Amazon, and Apple, which, by the way, reduced in-app purchase fees from 30% to 15%, saving over $3.5 million annually. Angel also strengthened partner relationships with Roku, LG, and others, with improved revenue terms and record TV performance. Approximately 30% of Guild membership signups come from these channels. On web and mobile, key optimizations boosted engagement and revenue. Redesigns to onboarding, sign-up flow, and pricing increased Guild signups by 9% and revenue by 6%. Mobile enhancements included over-the-air updates and flexible checkout options, and they continue to improve the overall experience. Our simplified submission process and automated upflows enabled a record 150 concurrent film submissions by filmmakers. New membership plans and parental controls expand options and personalized experiences for our audience. These initiatives reinforce Angel's commitment to innovation and delivering exceptional experiences to viewers and filmmakers alike. Finally, and this is huge, our teams are already seeing breakthroughs from adopting AI. We ran a sophisticated A/B test. Traditional discovery is the control. AI-driven discovery is the experiment. The result? The AI version boosted average watch time for Guild members by a full 12%. And remember, watch time is the most significant factor to increase retention. To summarize, Angel's value isn't just measured by quarterly box office results, but by the strength, growth, and recurring nature of the Guild that powers them. To our early supporters, team, filmmakers, and the entire Guild, thank you for your courage, creativity, engagement, and faith. You've proven that when people unite around a mission to tell values-driven stories, we can transform an industry. And maybe, just maybe, we can make the world a better place for our children. With that, I'll turn over the time to Scott to walk through our financial results in more detail.
Thanks, Neil. Good morning. It's a privilege to be here to walk you through the details behind what was really a historic quarter for Angel. As Neil outlined, our results this quarter highlight both the strength of our model and the scale of the community supporting it. It's important to understand how balancing rapid growth with responsible investment to position the company to take advantage of this enormous opportunity. I believe the Q3 results reflect the success of our strategy. Our Q3 top line was $76.5 million in revenue, which is a 280% increase over 2024, when we did $20 million in the third quarter. For the first 9 months of 2025, revenue grew 223% to $211.6 million, up from $65.5 million last year. The Guild revenue accounted for 77% of total revenue in this quarter, as compared to last year when it accounted for only 45%. Total Guild membership as of September 30th reached 1.6 million members. That's up from 1.3 million, a 19% increase in the second quarter, and up over 500% year over year, contributing an additional $50 million in revenue from the Guild for the quarter over last year. Trailing 12 months average revenue per Guild member, ARPM, per month, is currently $13.70, and this is a new metric we are disclosing publicly. What's important to note in all these numbers is the foundation we are building. We're continuing to see our investment in member acquisition delivering significant top-line growth and momentum. This level of growth we're seeing is the result of the value proposition to our members, leading to significant value creation for our shareholders. Cost of revenues was $34.3 million, compared to $8.1 million in the same quarter last year. This is due to more memberships and the transaction fees related to that growth, along with the higher royalty payments to filmmakers as they benefit from their performance, which in turn fuels Guild growth. A true financial meritocracy for our filmmakers is key to the Angel strategy. Selling and marketing expense was $64.7 million, up from $16.6 million in the same quarter last year. And as long as we can efficiently grow the Angel Guild, you'll continue to see this investment. Along with Guild investment, we had 2 theatrical releases during the period as well, contributing to the increase in selling and marketing expense. General and administrative expenses were $10.1 million, and research and development totaled $4.2 million in the quarter. We are seeing significant economies of scale as G&A expenses are relatively flat year over year to date. Now, as a public company, we will feel pressure to expand G&A, but we'll work to be efficient in our support of the company and its growth. Our investment in growth of the Guild, over 500% year over year, led to a net loss of $38.6 million in the quarter, or 25 cents per share, compared to a net loss of $13.9 million, or 10 cents per share in the same period last year. This includes expenses related to our merger and the process of trading on the New York Stock Exchange. As to the balance sheet, Angel ended the quarter with $63.3 million in cash and cash equivalents, compared with $7.2 million at the end of 2024. As to IP acquisitions, as we did with the David film and the other franchises we're acquiring, we continue to remain opportunistic as amazing films and our television series come along that fulfill an economic and strategic benefit to Angel. These are few in number compared to the Angel Guild library, but we believe have the potential to accelerate growth and provide enormous value to Angel and our members. We also continue to invest in technology to extend our reach, scale the business, and strengthen the ecosystem. These are intentional and responsible investments carefully aligned with the mission of Angel to grow the Guild and deliver high-quality, values-driven entertainment to the world. Unlike traditional studios that rely on high-cost, in-house content production, our audience-first approach, along with our distinctive filmmaker royalty partnership model, allows us to scale efficiently by funding and distributing projects based on real audience demand and filmmakers believing in their fine product. This approach reduces execution risk and capital intensity. Now, just before our public listing, we also closed a $100 million credit facility with Trinity Capital, providing additional flexibility to fund continued growth of the Angel Guild. As of the quarter, we had drawn $40 million on that facility. And since 2021, we have been holding Bitcoin as part of our treasury strategy. That balance is reflected in the Q at 34.6 million. This equates to about 1.8 Bitcoin per million shares of Angel. And to provide the company with greater flexibility, and with Angel now shelf eligible, we have filed a shelf registration of 400 million and expect to file an at-the-market ATM offering shortly after the government reopens. We believe that having this in place is a matter of sound corporate governance and prudent capital planning, providing optionality as strategic opportunities arise. And before I close, I'd like to address our approach to guidance. We're in a period of exceptionally high growth, and with that comes a number of dynamic variables, including the timing of theatrical releases, Guild membership momentum, and film and television-related investments that can shift from quarter to quarter. While things will change and evolve, to provide guidance now would be premature, given the pace and variability of our expansion. Like entertainment platforms that have gone before us in their early years, our focus is on scaling efficiently before shifting toward formal targets. We will continue to provide transparency through our quarterly updates, and we're a fast-growing company prioritizing disciplined execution and sustainable growth. In summary, the third quarter marked a historic period for Angel Studios, an exciting beginning to our journey as a public company. Our results demonstrate the power of the Angel Guild model, a recurring revenue engine fueled by a passionate global community. We have millions more members to add to the Guild as we believe Angel curated films will serve the majority of families in America seeking excellent, value-driven stories to share with each other. We have a lot of work ahead to meet our goals, and as value-driven entertainment continues to expand globally, we're uniquely positioned to lead that movement. Thank you. And with that, I'll turn it back to the operator to open the line for further questions.
Certainly. We'll now be conducting a question and answer session. If you'd like to be placed into question queue, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. One moment, please, while we pull for questions. Our first question is coming from Jason Helfstein from Oppenheimer. Your line is now live.
Hey, everyone, and congratulations on your first earnings call and joining the public markets. So, Neil, maybe just one for you and then a few financial questions for Scott, and then I'll get back in the queue. So help us to think about, like, for example, like the David franchise. I don't know if you're going to disclose how much that acquisition was. I assume you look at this as an incremental driver of subscriber acquisition. Maybe just talk through, like, you know, how you think about the ROI of this type of franchise, and then I'll ask a few questions of Scott. Thanks.
You bet. So the David acquisition was $80 million, and it was done in conjunction with 2521 Entertainment, who's been a great long-term partner. And strategically, it was about the combination of a film and a series. And this is the highest Guild-rated title in our history. And the series they're 5-minute shorts and have performed exceptionally well on our service. And so when you actually see the David movie, you'll find that the quality of this movie, it was produced by talent from Pixar, Disney, DreamWorks. The script was reviewed by the writer for the story, the head of story for some Pixar movies. Anyway, it's just phenomenal work, and as I've done early screenings, people are like, "Wow!" They think it looks like a $200 million movie, and so between the fact that it's the highest level of work that we've ever done, and then we have the potential to turn it into a series and have all of the IP rights associated with derivative works and such. This is a long-term play and a real great opportunity for 2026, because we'll do the release of the film at the end of the year in fourth quarter, which is the second best quarter for theatrical releases. And then it's the best quarter historically for streaming. And so we'll be able to take advantage of the Young David series right here during the fourth quarter. And then we'll be able to take the momentum from the theatrical release and carry that as it goes on into the Guild and into other windows into our 2026 results. So very excited about that. There'll be more to come on that in our report next year.
Thanks. That's great. That's actually a perfect segue. So, Scott, I guess, understand you're not giving guidance and understand the logic there, but just maybe help us think a little bit about seasonality for net adds between 3Q and 4Q. I mean, Neil just said how 4Q is typically a strong time for streaming, but just elaborate there. And then I'm going to do just then two more after that, and I'll get back to you.
I'm sorry, Jason, could you repeat that again? Turn it up a little bit.
Yeah,
sorry.
Just a little bit. But I'll repeat the question, Jason, so he can hear it while they turn it up. So he was asking about how many net membership ads we'll have in fourth quarter in terms of, like, how do we think about seasonality of the quarter and how it'll affect net ads?
Yeah, so generally, as Neil mentioned, fourth quarter is the strongest streaming month or quarter of the year, generally speaking. It's 4 and 2 are generally the two strongest. As we move towards the holiday season and as people start to come on and as we release more and more of the content that we have, obviously we have the Big David release, which we talked about. We anticipate that's a number that will grow as it goes into the fourth quarter. It's an effective month for us. We measure everything in the way that we acquire acquisition. We're looking at what our costs are, how much we have to invest, what's our return on those assets, on and on and on. And so we see, as we're doing that and we're measuring, we will lean in as we're getting response from the customer base. But we would anticipate to see fourth quarter being a strong quarter for us for sure.
Could I add something there, if you don't mind, Jason? The release lineup for streaming, we've got Wing Feather Saga that came out a couple of days ago, the first 2 episodes. Tuttle Twin Season 4. Homestead is coming out here in November. Wayfinders is coming out in December. Young David. Like the lineup for the titles that are hitting the platform in fourth quarter, they're our biggest IP, our biggest titles with brand new content, and I think that bodes well for the net adds in the fourth quarter.
Yeah.
Oh, yeah, great call, RP. So then, just want to ask a bit about the content licensing revenue in the quarter. What were the dynamics that drove the sequential increase there, and maybe tie that back? I think the gross margin was. So despite theatrical similar to 1Q, gross margins were below 1Q levels, and I think it ties back to content licensing. So just talk about the dynamics that are impacting the sequential increase in content licensing revenue, and how that flows through, and the swing factors around gross margins on a consolidated basis. Thanks.
Yeah, generally speaking, the mix of theatrical and Guild, as it's evolving over time, we're getting more and more Guild revenue as a percentage of our total revenue. Guild revenue includes things, Guild COGS includes things like transaction costs, the Guild tickets that we provide for our premium members, and those things, so that the actual Guild gross margin is somewhat lower than theatrical. In theatrical, as we recognize revenue from theatrical, a lot of those costs have been taken out by the theater, and then we get our cut from the theaters as that occurs. So if we have a huge release in the theater or multiple releases in the theater, you'll see gross margins going up somewhat. And as the Guild grows and becomes a bigger and bigger piece of the whole pie, you'll see some variability in the gross margin that way. It's not, the ARPM that we measure doesn't change dramatically from month to month. There can be some variability in it, but for the most part, the gross margin is more affected by mix of theatrical and gross margin than anything else, really.
And if I could add, on content licensing, one of the big innovations that happened this year was we got direct relationships with a lot of distributors, Apple, Amazon, Fandango, and others for premium video on demand, and that had a sizable impact on the content licensing revenue item.
Well, Neil also mentioned. I'm sorry.
Okay.
Go ahead. I was just going to say, sorry. Neil mentioned in the call a little bit that we're actually, as we're gaining more and more volume in a lot of our activities with our vendors, there will also be some benefits to scale throughout the expense structure of the company over time. We talked about some of the Apple benefits that we've gotten from the deals we've been able to cut from them.
Thank you.
Thank you. Next question today is coming from Ryan Myers from Lake Street Capital. Your line is now live.
Hey, guys. Thanks for taking my questions. Congratulations on the first earnings call of the public company. First question for me, appreciate the color that you guys gave us on average revenue per member. Just can you talk us through this? Maybe what you guys are targeting here. Is this kind of $13 to $14 the target range for you, or is there opportunity for that to get higher?
Well, there's always opportunities in many ways. ARPM over the measurement that we're using is over a 12-month period, so you won't see high volatility from month to month or quarter to quarter in general. But the things that would affect that would be that which is the mix of premium to basic plus to basic with ads. As those things adjust over time, you'll see some movement in that. We would like to end also the percentage of customers or members that are coming in on an annual basis, because we discount, there's a discount for annual memberships. So those things will move the number. It could, as the volume grows and as the guild grows over time, that mix will adjust and change. So we're not actually targeting a specific number. We don't see a huge movement at the moment, but adding this third tier will be we're A/B testing this all the time, and so we have some idea what that'll do, which will obviously, if you add a third tier to higher amount, it would imply that there would be some upward movement in that number. But again, it's one of those things like, if ARPM is slightly dropping but volume is increasing massively, at the end of the day, it's about that the ability to generate the revenue from the members. But it shouldn't move too hard. I think where it's currently at is, it's a math problem driven by those factors that we just talked about mostly.
Okay, got it. Makes sense. And then just thinking about marketing spend for the quarter, it came in about $65 million. Any sort of commentary you can give us as far as how we should be thinking about that for maybe the fourth quarter and then the balance of 2026?
Yeah, I think, again, there's going to always be some volatility in that number, particularly as we offer theatrical releases. When you see a David go out, if it extends beyond, if it goes from a double to a triple to a home run, you'll see us lean in on marketing expense in those instances. So there'll be that could cause some, significant variability in that number. We measure, we A/B test, we're always looking at the data. So as we are looking at our ability to acquire customers at the cost and it's efficient, we will continue to lean in as we see things like, well, as you mentioned, as ARPM starts to move in terms of we see the different tiers that are coming in, it affects customer lifetime value. We will always lean into most effective and efficient sort of space or band for us to operate in. I wouldn't think of 65 million as a static number, though. I think that'll move, particularly depending on the different theatrical releases we have.
And then we expect incremental increases.
Sure.
I mean, we're now to be helpful. We are now tracking the average revenue per member, and we're breaking out the marketing for the guild and the revenue for the guild to help investors to understand how that's incrementally growing in terms of marketing spend and guild memberships and overall guild revenue.
Okay, got it. Appreciate the visibility there. Thanks for taking my questions.
Hey, thanks, Ryan.
Thank you. Next question today is coming from Thomas Forte from Maxim. Your line is now live.
Great. So first off, Neil and Scott, congratulations on going public. I have deep respect for your mission and also enjoy your movies quite a bit. One question, one follow-up. Now that you're a publicly traded company, how has that impacted your ability to attract members to the guild?
I love that question. Thank you, Tom. So ANGX is a symbol, and if there was ever a company that merits being a public company, it's Angel. We had almost 70,000 investors when we went live on the New York Stock Exchange, and this is a number. It's a symbol of the movement and of the success and impact of the movement, and it allows a lot more people to enlist in the movement. It was really interesting to see because we had raised 55 million leading right up to the public listing, and then we saw volumes in excess of that in a day's time on the exchange. The public markets offer incredible scale. We were able to do a deal with Trinity Capital as part of this process and raise other capital for growing the guild. So this should all be positive towards our guild growth opportunities ahead. So
wonderful. All right, and then for my follow-up, super impressed. How are you able to attract Kevin James to Angel Studios for his upcoming release, O Sole Mio? And then as part of attracting him, are you obligated to spend a disproportionate amount of money on marketing compared to your other films?
I'll let Scott cover the marketing question, and then I'll talk about how we attracted him.
Yeah, there are times when there's some contractual requirements on advertising, without speaking specifically to Kevin's deal. But for the most part, advertising is driven in part by its performance in the theaters and how it's performing both in pre-sales and in the early part of the as it's released into the theaters and how it's performing in the theaters. But that'll be the biggest driver of that number will clearly be, it's never an inordinate amount. We never make deals where we're guaranteeing some sort of $30 million investment. It's always in sync with how the film is producing so that we can keep that in check vis-a-vis the revenue that we're going to get.
Yeah, that's important to our model when we do a deal is that marketing spend is right-sized for the release. So now attracting Kevin James, today Angel has two sides to its network and market, and we have a differentiated edge in each side. So we've got the audience, and then we've got filmmakers, and Kevin James was attracted because of both of these components. On the audience side, the Guild helps us make the decisions as to which films and TV shows. They're engaged, they're invested, and they put their money where and their feet where their decisions are. They show up in theaters to help support the release of films. That creates a platform for filmmakers that they can't get anywhere else. And so when Kevin James wants to be on the silver screen and he wants a lot of people that are getting behind the opening release on February 6th next year, well, Angel is his best opportunity. We have 1.6 million Guild members who now know that the Guild trusts this story, that it's highly rated, and they'll vote with their feet. So, secondly, on the filmmaker side, the way we do things differently is we share in the net with our partners, and this provides the benefit that we don't have as much capital outlay and costs to operate and scale our business as most do, but it also, to the filmmaker side, it benefits them because if they truly believe in their work, which Kevin James is an amazing actor, comedian, and he does, and he should because Solo Mio scored off the charts. So he's saying, so the traditional streamers, they pay too much for the duds and too little for the successes, and he believes he's going to be a success. And so he decided to go with Angel. He gets a platform to launch it, huge community, and he gets to share in the upside. So those two are the reasons that Kevin and other A players are coming to Angel.
And I think there's a constant theme here, which is that as a company, we're more like a tech company in the sense that we are constantly trying to align our revenues with our expenses, as opposed to having massive sort of dislocations between one and the other over time.
Correct. Because the Angel app, we actually sell the tickets direct to the audience for Solo Mio, and we can right-size the marketing spend around that.
Yep.
Thank you, Neil. Thank you, Scott.
Hey, thanks.
Thank you, Tom.
Thank you. Next question is coming from Eric Handler from Roth MKM. Your line is now live.
Good morning, guys. Thanks for the question. Two questions.
Morning.
First, wonder if you'd be willing to give sort of like a breakdown between your various tiers for your members at this point. And then as a follow-up to that, I know it's still very early with, basic plus advertising. What is sort of your early reads on the, including advertising as part of the package?
Yes. Really good question. Thank you, Eric. So we haven't published the breakdown. However, what's been really encouraging is we did basic with ads and then distinguished basic, and then we have premium at the top tier. By introducing a basic without ads, that has helped us increase the premium account. And so that's very exciting for us. But we haven't published the actual breakout of those numbers. But we're constantly testing these things, and you'll see evolution over time as we hone in on the message and on the right offering for new guild members.
Fair enough. And then, Scott, I wonder if you could just sort of give your key milestones or goals that you want to achieve in 2026.
So, as we look at the company, obviously, when we talk around the company about what is it we want to do next year, we always fall back on all questions lead to growing the guild. And that's the essence of what we're trying to do here. We're trying to build a company and an opportunity where we can provide the kind of content that we want our families to share for the rest of their lives without giving any specific guidance. Typically, what we're looking to do is continue to invest in the guild like we've been doing. We'll see the economies of scale start to grow, even in terms of, vis-a-vis the marketing expense. As we grow that guild base and it gets larger and larger and larger. If you look at membership in our sector, you see that members who are with you the longest tend to stay with you. Once they've gone past about a 90-day or even a 6-month period, they stay with you much, much longer. As that base of those who have been with us, continues to grow and becomes a bigger part of our foundation, we would see that provide economies to our expenses and give us some operational leverage to improve upon that. It's a constant every day. We're looking to improve upon that, get stronger, and start to scale our business a little bit more every month and every quarter.
Thanks, Scott.
You're welcome, Eric. Thank you.
Thank you. Next question is coming from Stephen Cahill from Wells Fargo. Your line is now live.
Thank you. A couple of strategic questions and a housekeeping one. So on the theatrical side, we've seen a lot of growth in premium large format like IMAX type screens, which seems to have a good kind of virtuous circle of folks returning to the box office. So curious for your theatrical releases, how you're thinking about premium large format theaters. Relatedly, when you think about how to go to market on streaming, there's a model of being more niche where we often see penetration reach levels, but on smaller services like Starz or Crunchyroll. And then there's, licensing to scale players, where you have a lot less control, but often the numbers of viewership can get pretty big. I'm thinking platforms like Netflix or Disney. So how do you think about scaling your streaming platform within this overall industry structure, which is kind of constantly changing? And then just a housekeeping one on deferred revenue. I think it's moved up a little bit since the beginning of the year. Just wondering if you could comment on what's driving the deferred revenue increase. Thank you.
Great. Thank you very much, Stephen. Would you cover the deferred revenue, and I'll cover the other part of the question?
On the deferred revenue, it's driven by the amount of our annual memberships vis-a-vis our monthly memberships. So it depends on, sometimes it's the offers that we're providing. We may have a Black Friday sale or something else on annuals that would push that number. That would increase the deferred revenue compared to the revenues over time. And so that's literally the way we look at it. It has to do with the 12-month amortization on the revenue recognition on annual revenues. And that'll vary a little bit based on different, sometimes it's consumer behavior and just the time of year that they're they're inputting, and it depends on the type of offerings that we have. We actually draw customers in based on the different content that we provide, and so that will change in some variability. Series will have a different response than a feature film might, and that again will impact annual memberships, which then have to be amortized over the 12 months that they're with us.
Thanks, Scott. So the big IMAX screens, we very much think about that on a per title basis, on whether a film justifies being on that kind of a screen. And we were having discussions about, and in fact, before moving Zero AD into 2026, and then moving David here into the fourth quarter, we were having discussions with IMAX about Zero AD in IMAX, because Zero AD is just this amazing, breathtaking experience and deserves to be on IMAX screen. So it's very much on a per title strategy, and whether that makes sense for IMAX and for Angel. On your question about the size of the market and the way we think about the market, I don't want to, without offending the coasts, because most of the decisions in this industry have traditionally been made in New York and California. From my perspective, and those now millions of people who are coming to this movement, the coasts are serving like 10% of the audience. That those are the people who go to the theaters regularly. 10% of the audience goes to the theaters, and they have a worldview that mirrors Hollywood, and we look at that as more fringe. That's the way that I see it, Stephen. But the numbers also support that. So Angel's mission is to tell stories that amplify light, which is the broad umbrella. And faith is a subcategory of that umbrella. And HarrisX did a global faith and entertainment survey where they found that 73% of global entertainment consumers consider their religion and their faith very important to them, and they want more of. It's basically a proxy for light. So we think of that HarrisX survey as kind of the floor for the total addressable market. And when we look at that HarrisX survey for the U.S. market, it's at 77% of Americans. So if I just did some simple calculations for you, and we just took Netflix, for instance, and their install base, I think August they reported 82 million total households subscribed to Netflix. So let's call that great market penetration in the U.S. If we took the faith base, that would be over 62 million households. Now, the question I have is, how far can Angel expand above that? Because Angel has a broader tent approach to the way we do this, because we're values driven. When we look at the global market and the way that it's moving by 2034, Oppenheimer did a report for us that said our global addressable market is over $300 billion. So this is very mainstream, and I think people will discover that over time, even though the industry likes to think of Angel as serving a niche. It's very much serving the desires of mainstream audiences throughout America and throughout the world who don't, who just want to be represented better. And Angel lets them decide what Angel distributes. So this model is extremely disruptive, and we're very excited about the future.
Thank you.
You bet, Eric.
Thank you. Those are all the questions we have from the line. We now want to take a few questions from your Angel Guild members that have pre-submitted questions online. Let me start with the first one. Is Angel Studios committed to walking the path of courageous, value-driven storytelling, or will it eventually be pressured into the same market and political compromises that have hollowed out Hollywood? In becoming public, it worries me that you'll compromise the core message on your movies, series, and animations. How can you assure us that won't happen?
Well, just to be really direct, that's up to you. Because at Angel, you get to decide what we can distribute. So we have to have your permission. I as the CEO of Angel Studios and as a founder, I can't publish something on the Angel platform without your permission. So that power is in your hands at Angel. The Angel brand represents all of you, and that will continue. Now, you might ask yourself, okay, fine, but now that you're a public company, perhaps the company could be taken over by larger companies and that the mission can be veered off. Well, the unique way in which we went public was to address this very question. So we have almost 70,000 people who are cheering for us, rooting for us, and literally made all of this possible by investing in Angel, and then another like 150,000 people who have invested in Angel projects. And well, they asked over and over again, if you guys go public, are you going to lose the mission? How can you hold on to the mission? How do you make sure that the public markets don't veer us off course? So what we did is we gave the original founders and the people who helped us way back in 2016 and a group of people who helped us in 2021, we gave everyone super voting shares. So they get 10 votes per share. And so those original people who believed in us when there was no reason to believe, because the situation got very bleak for Angel in the early days in a big, huge lawsuit, and helped us get through that, we gave them and the founders the power to decide the future of the company. And so we're going to, that's the reason that we're here, is for that mission. The reason that we're here is to make the world a better place for our children and grandchildren. We believe that will actually be very profitable as a media and technology business, and that's where we intend to go. So thanks for that great question, and you can be assured that Angel is rock solid on our mission.
Thanks. Let's move on to your next Guild member question. This member asks, I've been a Guild member for 6 months, and my family and I love the Tuttle twins in particular. I was wondering, how can I share access with my friends and family?
I love this question as well. So we have a couple of opportunities to share as Guild members. So just in time for the holidays, we've got ways that you can gift Guild memberships in the Angel store on the website, and we also introduced a brand new feature where you can share pretty much anything in the Guild like you can on YouTube, except it makes it so that when you share, they don't have to have a Guild membership. So just go to the Tuttle Twins episode in the app on your phone that you want to share, click the share for free access link, and then give that link to your friends and do this. Like, do this often. This is the way that we can spread the movement. And what we see is a great uptake from those people who are shared for free, where they end up joining Angel. So you can share without having to share your password, the way you may have previously done on other streaming platforms. But we wanted to make that easy, available for all Guild members to expand the movement.
Thank you. Let's take our final Guild member question. I'm a film producer and also a Guild member and appreciate what Angel is doing. How do I get in touch with you about a project we could work on?
Another good question. And filmmakers of all sorts are very welcome. If you go to angel.com/filmmakers, or just go to angel.com and click on the menu, and there's a place there to learn more about filmmakers. This gives you everything that you need. It gives them estimates as to royalty payments. It explains how the Angel model works, how it benefits filmmakers, how Angel gives unprecedented creative control to our partners, and we just facilitate technology that connects the artists with their community. And so that was a great question, and we're very excited about the number of submissions now that are coming in, and we're building this this timeless library of stories that amplify light. All right.
Great. Back
Thank
over to
you
you for any closing remarks.
Okay, thank you. So thanks, everyone. I think the headline here is simple. The angel community is redefining the future of film and television, and our 1.6 million guild members, growing more than 500% year over year, are a testament to that fact, and that we're on to something great. This strong third quarter earnings release is our first as a publicly traded company on the New York Stock Exchange. And with everything we have in the pipeline, we hope to come back and deliver many more. We're on the roads in the coming weeks, meeting institutional investors at a range of tech and media conferences, and we would love to meet as many of you as possible. So I encourage you to get in touch with our investor relations team, Luke Johnsons and Jeanette Masters, to book your meeting with us. Thank you for joining us today, and we will see you all soon.
Thank you. That does conclude today's teleconference and webcast. You may disconnect your line at this time and have a wonderful day. We thank you for your participation.